Hey there, welcome back to this week's market update. We've got a wild mix of headlines to run through today, from shaky Japanese bond auctions to trade deals being pieced together ahead of looming tariff deadlines. And yes, somehow tariffs are a thing again. It's been a bit of a roller coaster, or as we like to call it, a little bit of a crazy train. RIP Ozzy, by the way. Let's start with rates and mortgage bonds. Mortgage-backed securities are down a bit this morning, about 6 to 7 basis points. The 10-year Treasury is up slightly too, but overall the recent trend has actually been favorable. Rates have been drifting lower and we've been trading above key support levels on the charts. A big global factor, Japan. They've had a very weak bond auction, pushing their 10-year yields to levels we haven't seen since 2008. And because bond markets are all interconnected, it's pressuring yields higher everywhere else too, including here in the US. Now, speaking of international news, we've been watching the tariff situation closely. With an August 1st deadline looming, several trade deals have been finalized: Japan, Indonesia, the Philippines, and there is progress being made with China and the EU. The global vibe: tariffs on, then off, then on, then maybe on again, then maybe off. But the latest round of deals, averaging around 15% on Japanese goods, seems like a step towards stability, which could help settle broader markets in the weeks ahead. Now let's talk real estate. Existing home sales came in soft again, down 2.7% in June. That brings the annualized pace under 4 million units, still way below the pre-pandemic average of 5 to 5.5 million. But here's the key. This drop doesn't mean demand is gone, it's just paused. A lot of buyers are still out there. They're just on the sidelines because of rates, and as rates ease, we're likely to see a pop in activity. In fact, if we can get into the low 6% range on average, say around 6.125 to 6.375, I think we'll see that spring-loaded demand finally start to release. Now, the median home price has hit new records in June, $435,300. That's up nearly 3% from last month and 2% year over year. Inventory ticked down a bit month over month, but is still up 16% from last year. But active listings, what's really available, are up nearly 30% from last year. Still down 11% compared to pre-COVID levels though, and that's with 12 million more people in the country since then. So the supply shortage, it's still very real. Now, here's some quick hits. Average days on the market, about 27 days, which is the same as May. First-time buyers and cash buyers, there is a slight uptick. Homes sold over list price is down from 29% to 21%. Investors are down from 16 to 14%. Purchases are up 3% last week, and refinances are down 3%, but both are up 22% from a year ago. Now, this quote from Lawrence Yun really stood out. The record high median home prices reflects how American homeowners' wealth continues to grow. He estimates that the average homeowner gained $141,000 in wealth over the last 5 years, purely from home price appreciation. That's huge, and it's why even a small appreciation over time can change someone's financial life. That's the power of homeownership. Now, we have a little bit of war going on between FICO and VantageScore. FICO is hitting back at the FHFA's movement to allow VantageScore 4.0. In a new white paper, they're arguing that their Score 10T model finds significantly more risk in the riskiest borrowers and claims better pricing and approval rates for lenders. It's worth watching, especially as we move towards dual score models in the near future. And when there's major competition going on, in the end, consumers win. Now some local realtor news for those in San Diego. In San Diego, AssumeList just partnered with SDAR to give agents access to assumable mortgage listings. This could be a big deal in markets where 2 to 4% rates are locked into existing loans, and a great tool to help buyers get creative. Would love to see this expand nationally. Now lastly, we do have a lender lawsuit to talk about. Loan Depot right now is getting hit with a class action lawsuit alleging shady practices pre-IPO, pushing borrowers into higher cost loans, altering internal docs, even robo-signing. The alleged damage, as much as $300 billion in loan volume between 2019 and 2021. We're going to keep an eye on this, but this just goes as a reminder, it's important who you decide to work with, who you decide to partner with, especially on something important like buying a home. Well, that's all I got for you this week. Keep having those buyer and seller convos, and we're getting closer to a more favorable rate environment. And every update like this helps prep your people to move when the time is right. Let me know if you want the charts I mentioned or local appreciation forecast to share. I've got the data. That's all I got. I'll catch you in the next one.